Good evening, everybody. Cold spring evening here in Pittsburgh. But again, we have the pleasure of having Kirt Christensen with us. He's got some very good insights on trading rules that will help you kind of keep your focus on making profits. So I won't take up any of his time. Kirt, welcome to the Candlestick Forum. Anxious again to see your information.
Hey, fantastic. Hey, thanks again for having me on, Stephen. We'll go ahead and start. I got the slides pulled up. I don't think I need to do anything besides start flipping through them, and we'll make sure that works. Of course it does. Okay, great. So tonight we're going to talk for about 45 minutes. We've got about 15 minutes of Q&A. So as we go through it, we will probably answer most of your questions throughout the presentation, but if not, we will have a Q&A question time period at the end. So we're going to talk about how to trade stocks and predictably fatten your accounts by laser focusing on one simple setup, not 1,000, not 100, not a dozen, just one simple setup with one page of trading rules, all in 15 minutes a day. So of course, the usual legal stuff our attorneys advise we discuss. Financial markets are risky, investing is risky, past performance does not guarantee future performance. Tonight I want to talk to you about the one thing that changes everything in your trading. And that is a simple trade setup that works predictably, mechanically, and is evergreen, works in weeks in, months in, years in. So here's a real trade example to start us off. So here on the screen you can see here's the daily chart for Tesla, stock you've probably heard of course. Who hasn't, right? But you can see I've drawn in some just a red triangle, a red flag, a pennant, triangle, whatever you want to call it. We're usually going to refer to it as a high tight flag. I've drawn that in on the daily chart, and then you can see at about the $439.26 price, where you can see the teal turquoise bar, that's where we entered. So how did we know when to enter? Exactly right there. And you can see what happened with the rest of the trade after forming that high tight flag. What exactly happened with the trade? Well, so we bought on 11/17 for $439.20, like we mentioned. The maximum risk was our low of the candle of that day, slightly below the low of the candle of the day, so $6.19 of risk per share. And we realized a gain of over $220 per share. So if you figure out our risk reward, $220 in reward, our risk, the maximum risk at any time was $6.19, which is 32.34 to 1. So if you had a risk return ratio of 1 to 32, 1 being a unit of risk, 32 being the reward, how often do you have to be right in trading to just break even? Well, you'd have to be right 3.1% of the time. Right? So I know most of you are thinking, wow, it can't be that hard to be right 3.1% of the time, and you're correct. That's what we're talking about tonight. You can do this. This is a very doable, achievable strategy, trading this particular brand or setup of breakouts, and we'll explain it all tonight. So using this system, you will see results. We're going to teach you how to look for a simple setup with the trading rules that can be explained in one page. We're going to teach you how to hold on to your winners, squeezing as much out of them as you can, and cut your losses quickly and for tiny paper cuts instead of stomach churning losses. We're going to show you how to have a risk return ratio of a minimum of 1 to 10 as the norm and a minimum of 1 to 5. That means for every 1 unit of risk, we want to get 5 times that in return, preferably 10 times that in return. We're going to teach you how to only trade the long side of the market, and this can be traded from any brokerage in the world, preferably one with 0 commissions. And 0 commissions is kind of becoming the norm now. I think Robinhood led the way, and then on the retail side, I think TD Ameritrade and Thinkorswim was the very next after that. So almost any brokerage has, if not free commissions, but extremely cheap commissions. And we'll show you how to set up and run these scans and charts in Thinkorswim, which is my personal favorite, or TC2000 or Metastock, or you can run it on a wide variety of platforms. So my promise to you tonight, webinar promise number 1, you don't need fundamental analysis to trade the strategy. You don't need special software, algorithms, or insider info. You don't need to day trade. You can check your positions 15 minutes a day, and that's it. And webinar promise number 4, why a win rate is garbage and what you should focus on instead. Now, that's kind of the big claim. One of the things we talk about in trading all the time is win rate, win rate, win rate. But when you trade this strategy, win rate is kind of going to go by the side of the road, because you're going to see you want to get into as many of these potential breakouts as what we're trading breakouts, and the potential returns, because we're trying to make 5 to 10 times our initial risk. As long as you have a reasonable win rate, you're going to be just fine. So skeptical, good. So here's what we're going to cover tonight and explain it all to you. It's going to take a very reasonable time requirement to learn the strategy, but it's something almost anyone can find the time to do. Typically, I trade this strategy for about an hour a day, the first hour that the market's open. So 6:30 a.m. Pacific time to 7:30 a.m. Pacific time, so 9:30 a.m. to 10:30 a.m. Eastern time. It won't cost you king's ransom of cost. It's a system that's getting consistent results across the board for people in the know. It's just something you have to commit to for 6 months to fine-tune your eye for the setup and start seeing consistent results. So first off, I do have a confession, rather embarrassing confession. A lot of people were very successful traders just using discretionary subjective trading, and that is not for me. That subjective discretionary idea where you can come up with a trade idea and then you just come up with exactly when you're going to enter, exactly when you're going to exit, and it all seems to work out. But when I discovered rules-based trading systems, and this is what I've been trading personally myself for the last 15 of 22 years that I've been trading, that's when it completely changed my life. So if you're feeling challenged, stressed, or even a little bit fearful when you enter trades, this is for you. So of course, I've got to give you just a little bit of background. I promise these next 15 slides of my background will take about 60 seconds. So just to kind of let you know where I'm coming from. I was born in a dairy farm in Preston, Idaho. So if you ever saw the Napoleon movie that came out, in 2004, Napoleon Dynamite, that was set in my hometown. This is the dairy farm that my family has lived on for 4 or 5 generations now. But I went to college, got married. I have 3 wonderful kids and my wonderful wife, and I figured this particular trading strategy out so you don't have to. Now life is pretty decent. I do take every Friday off. I travel a lot, obviously not in 2020, just got back from a 2-week trip to Costa Rica. I've spent months of my life in Costa Rica with my family, taking my wife everywhere there is possible to go in Europe. That's Vienna and Budapest. And I snowboard about 15 days a year, and I wakeboard or wake surf another 15. So this is generally in the summer where you're going to find me. This is a lake in North Idaho that I have a place at called Spirit Lake. I serve. I have a lot of times to serve in my community, sometimes 20 hours a week. I've given away at least $500,000 so far. So, places like this are things that, really speak to my soul, the mountains in North Idaho. And of course, I run online businesses. I've sold over $20 million so far, spoken at events all over the world. This is at one of the last financial marketing summits before the world shut down last year, I guess, in 2020. This was the end of 2018 in London, UK. And if you're ever in the neighborhood, we're in Spokane Valley, Washington, which is on the Idaho-Washington border, about 5 hours east of Spokane. Love to have you. Love having customers come into town and going to lunch and shooting the breeze about trading and life and all of that. So I say all that just to let you know I'm a real guy, real person, been in this for a long time. I'm going to be here. I'm around. So these are the 3 steps to mastering this specific setup for stock trading. Step number 1, we're going to teach you how to scan for and trade the BMWs and Ferraris of the stock market, which I refer to as momentum stocks. We're going to teach you how to trade for the long side of the market, looking for one very specific, very learnable, easy to identify setup. We're going to teach you how to keep your risk to reward ratio absurdly high, let your winners run, and cut your losses quickly. And frankly, it's next to impossible to screw up stock trading if you follow these 3 steps. So Richard Dennis, the famous inventor, along with his partner, of the concept of turtle traders, he brought in a group of people and taught them some mechanical rules for trading the stock market, which is essentially exactly what we're doing tonight. He said there are 1,000 ways to make money in the markets. The problem is all of them are hidden amongst tons of crap that doesn't work. And if there was ever a statement that was more true about trading, I haven't heard it. Once you discover this setup and how to get this setup down, it's perfectly fine to branch out, trade other setups, learn and discover other methods, but get this down first. This is going to give you consistency over months, which is much more important than the consistency over weeks or just simply having winning trades. And you can always tell a successful trader versus a non-successful trader based on what they tell you about their trading. If they're super excited about it in any individual trade, pass, because they just got into trading, right? You want someone who's super consistent over months and preferably over years, and that's what we're talking about tonight. This setup will allow you to do that. So this setup, we're going to teach you how to trade what we call the BMWs and Ferraris of the stock market, which are momentum stocks. Now, so what is a momentum stock? Well, the definition from Investopedia is momentum investing involves a strategy to capitalize on the continuance of an existing market trend. So it's a trend that we're entering a trend that's already in existence. Right? It involves going long stocks, futures, or market ETFs showing upward trending prices and short the respective assets with downward trending prices. Momentum investing holds that trends can persist for some time. We all know that to be true. Can trends persist for some time? Absolutely. We're not trying to guess the tops or bottoms of trend. We're trying to get in when the momentum's good because they tend to persist for some time. And it's possible to profit by staying with the trend until its conclusion, no matter how long that may be. For example, momentum investors that entered the U.S. stock market in 2009 generally enjoyed an uptrend until December 2018. So obviously here's some benefits of trading momentum stocks. Potential number one, you get potential for high profits over a short period of time. You get to leverage the market's volatility to your advantage, and you get to leverage the emotional decisions of other investors. So why is that important? Well, quite frankly, trading the right stock, once our momentum and growth leaders, tilts the odds slightly in your favor right out of the gate. It also speeds up the trading process because really trading is a game of time. Since trades can either be losers or winners in a matter of days, the higher momentum stocks that you trade, that allows your compounding periods to kick in much more times per year. So which would you rather trade? A stock that goes up 15% in 2 weeks or 15% in 2 months? It's quite obvious that you prefer to trade something that goes up 15% in 2 weeks. So can you see why experts and successful traders viewing scanning and picking the right stocks as critical to their progress? Well, of course, it's pretty obvious. So here's some more proof. You can look this up on NASDAQ.com. Headline article, this is proof that momentum strategies work. From UCLA Anderson in their business department, momentum investing, it works, but why? And from the Wall Street Journal, 5 trends that skyrocketed in 2020. One of them was investing in momentum or growth stocks. So here's exactly how to set this up. Here's exactly what you need to look for to find these momentum stocks. So this is how you would set this up in Thinkorswim or TC2000 or Metastock, whatever scanning platform that you use. You're going to be able to adapt this slightly and make this work on whatever platform you have. So first thing you want to look for, if you want to look for these 3 time periods, 1 month, 3 month, and 6 months. And what you're looking for is essentially a stock that's outpaced the market over that time period. So in TC2000, you'd be looking, they have a feature for price growth on a percentile basis. So you'd look for price growth more than or equal to 90% of the full universe of stocks on a 1 month, 3 month, or 6 months. And in Thinkorswim, we use something slightly modified from that. We look for something that's grown, its price has grown over 20% over the last 1 month, over 40% over the last 3 months, or over 80% in the last 6 months. So that's super important. You're trying to weed out of the 5,500 stocks on the market, you're trying to weed out and try to get the top percentiles of stocks that have moved. Price growth has increased dramatically during the 1 month, 3 month, and 6 month time period. Does that make sense, everyone? Hopefully it does. Okay, so that's step number 1. Step number 2 is you want to scan for an average daily range or volatility. It's just ADR is just a way of measuring volatility. Average daily range is how much the stock moves on a daily basis while the market's open. It's basically the highs of the day minus the lows of the day, right, divided over the whatever period that you're looking at. Generally, it's about 20 days, and that's expressed in a percentage form. So you're looking for an ADR or an average daily range of over 6%. That means if a stock opens the day at 100, it's very likely that that stock that day will end the day at 106 or 94, right? It's just an expression of volatility. We also want to scan for stocks that have enough volume to make this worthwhile. Enough volume will give us a decent bid-ask spread, enable us to get in and out of positions when we want to without moving the market ourselves. So we're scanning for a $10 million in daily price volume, which would be the shares traded by the price, or if you don't have that feature in your software, you can scan for at least 1 million shares traded on an average day. Okay. So from each of those 3 scans, you're going to get some crossover, of course. The ideal would be that you have no more than 30 stocks in a pair in each scan. If you aren't getting enough, you can lower your requirements. If you're getting too many, you can tighten them. So you're going to have to tweak and adjust these settings over time. In huge bull markets, you're going to have to tighten them up a little bit. In slow markets, you're going to have to loosen them a little bit, and you're not going to get as many results. Only start trading lower ADR stocks as your account grows. If you have less than $200,000 in your account, don't trade anything less than 5% ADR, because at almost any point in time, you can find something that trades just as well as the lower ADR stock, but has the potential to make the trades a lot faster, so you can get more compounding periods in a year. So someone asked in the chat, is ADR the ATR? Now, we're going to talk about ATR in a second. ADR is on a percentage basis. ATR is usually expressed in a dollar format. They're slightly different. We use them both, and we'll show you that here in a second. So so I've told you exactly what we're looking for. We're looking for stocks that have outpaced the market over the last 1 month, 3 months, and 6 months, that have huge high momentum. They're better in terms of price growth than 90 to 95% of other stocks out there. They've had substantial price growth. Okay, they also have reasonable volume. They also have a decent average daily range, as in they move. Something's going to happen. They're not going to be bank stocks, right? If you look at something like Ford or C, you're going to see that they have a daily ADR of 2% or 3%. We want things that are moving 6, 7, 8, 10% in a normal day. Okay, step number 2. Trade long, looking for one very specific, very learnable, easy to identify setup. Here's the entry criteria. Here's what I use on my chart to look for this. We have a daily chart on half screen and an hour chart on half screen. The 1 hour chart is just for entries. We put up some simple indicators, the 10 SMA, the 20 SMA, and the 50 SMA on both charts. What we're looking for is a clean, smooth chart that's surfing the moving averages. Now we know, of course, the ones that we're going to be looking at have had significant price growth over this time period. The stock then all pullback. It goes to the 10 SMA, the 20 SMA, and sometimes the 50 SMA, and surfs it. The trading range narrows over a range of a few weeks or days. Narrow price range candles are put in, the price consolidates and kisses an SMA. If it's a low cap, don't settle for any choppiness. It should be just a beautiful, smooth looking chart. If it's a large cap, it's okay if it bounces around a little bit more. Here's exactly what we're looking for. So if you look here, Tupperware of all things, TUP, this last fall, you can see that it has significant price growth. It had an ADR of more than 6%, and it met the volume criteria that we just talked about. You'll see that it forms a gorgeous high tight flag there. You can see in the white lines that I drew in. And then from there, the price skyrocketed another 70 to 80%. If you look at lumber liquidators, I don't have a way to point at the screen, so I don't think they can see my pointer if I point at the screen, do they? I'll just have to describe it. So lumber liquidator, same thing. It had a couple different setups there in the middle of the screen. You can see after significant price growth, price consolidates and it trades sideways in a stair-step fashion, high tight flag before it breaks out again for another 40% growth. And the list of these candidates just goes on and on. Here's Kirkland Products, Kirt, K-I-R-K, which is the company behind Costco. You can see I drew in on that one. At the bottom there, it appreciated something like 200% from about 75 cents to $2 in the space of a month or so, puts in a nice high tight flag, and then explodes to the upside. The one on the right-hand side is Celsius, which is a beverage, like an energy drink. You can see that after moving from $4 or so last May, it reached somewhere around $18 in last August, traded sideways. The volatility drops off, right? So how can you tell that the volatility is dropping off? Well, the candles get smaller, right? From top to bottom, shorter, puts in a nice base, high tight flag, and then breaks out for a 20 or 30% gain. So the strongest setups of this type are going to find support in the 10 SMA. The stronger ones are going to go to the 20-day SMA, and the slower ones probably you should skip if you're a beginner. Go to the 50-day SMA. We buy at the opening range highs of the 1 hour candle when obvious range is broken. So we're looking for the triangle, the high tight flag to be formed. And then on breakout day, it obviously breaks out of that range, usually in that first 1 hour that the market's open. Most of these are going to happen the first hour that the market's open. And for it to be a valid trade, we need to snag it. We need to get it in our portfolio and put to bed before it's moved too much. How do we know that it's moved too much? Well, we want our entry price minus the low of the day to be less than the average true range. Okay, so we've talked already about ADR, which is expressed in percentage, and obviously that has to be over 6%. But on entry, we also look at the ATR, the average true range. And so let's say that the stock is at 100, and the average true range is $1. So we want to enter the trade on entry day before the stock has moved more than $1 from the low of the day. If it's moved more than that, we skip, look for something else. Because what we're looking to do is we're looking to enter it at exactly the right time, that a breakout has indeed occurred. The stock is moving, but it hasn't moved too much to totally screw up our risk-reward ratio, right? If something's already moved 2 or 3 times the average true range on a breakout day, well, what are the chances are that it's going to come down and stop us out? Well, a lot higher. We want to get in it right before it makes a big move. So ATR is average true range, and ATR, simple way to explain it, ATR includes gaps and is expressed in dollars and cents, and ADR doesn't include gaps. It's based on the daily highs and lows of any one particular day. This is the actual formula to set up ADR on Thinkorswim. You can see it here on the screen. It's just basically 100 times the high and the low of day 0, high and low of day 1, all the way to high and low of day, high and low of day 0 is the current day. High and low of 19 is 20 days back. Divided by 20 minus 1 times 100. It's a percentage right there. So here's more proof. This is from Investors Business Daily talking about high tight flag, smart chart reading. High tight flag can deliver skyscraper-sized gains. From Yahoo Finance, high tight flag is rare pattern that can deliver incredible gains. And here's step 3. So once we've already identified how to find this in our scans, right? We talked about that. We've already identified step 2, what the exact pattern is that we're looking for and the criteria that we're looking for, along with the moving averages. Step 3 is, well, how do we turn these into winners and cut our losers? So our initial stop when we get into this is our stop is a few ticks or cents below the low of the day, not in a number that ends in 5 or 0. We go ahead and set our stop and go away. We don't have to watch every single tick. 3 to 5 days after entry, what's going to have happened? Well, there's only a couple of outcomes, right? Either you're still in the trade or you're not. 3 to 5 days after entry, if you're not stopped at your initial stop, you're going to sell 1/3 to 1/2 of the entire position and move your stop to break even. If the market is choppy or the position doesn't look super healthy, you could sell 50% on day 3. That's more cautious and conservative. If you're in a great trending market or it's in a great sector and the position looks A+, keep the minimum. Be aggressive. Sell 33% on day 5. What that does is put some money in your pocket, pays the bills, and now the trade, there's no way that you can lose money because on the remainder of the position, you set the stop at break even. However, the stop just sits there at break even. That's the worst that could happen is it comes down and hits your break even stop on the remainder of the position. You exit the remainder of that position, remember either 50% or up to 66% on the first close below the 10 SMA on a daily chart. Okay, so that's the easiest way to do it. Just wait, hold on to the position. If it's going to continue to run, if it's going to continue to break out, you're going to go ahead and keep it as long as you possibly can, with as much size as you can. If it on a close below the 10 SMA, you get out. So this allows you to get pretty massive risk reward ratios, and this is why swing trading is far easier than day trading. Remember, we talked about generally our ideal situation is we want our reward to be 10 times the size of our risk. At the very minimum, we want our reward to be 5 times the size of our risk. And you take a look at this chart here. Most of the time when you're talking about day trading, they're risking, say, 2 units to get a reward of 1 unit. Well, to even break even with that type of strategy, you have to have a 67% win rate. That's why it just floors me when I see people talking about option strategies or other type of strategies where they're talking about they have an 80 or 95% win rate. Well, the problem with that type of strategy for the average person is the losses are going to be huge. Because sure, if you have a 90% win rate, that means on the flip side, your losses are going to have to be pretty massive to cover that. We're going the exact opposite. We're only trying to win 20 to 30% of our trades, but have the winners be huge. We're trying to flip the script. So on our side, we're taking a look at this column where we have our risk of 1. Look at the chart, the third row from the bottom. We want to risk 1 unit to have a reward of 5 units. To make that work, we just have to have a break-even win rate of 17%, right? We only have to be right less than 1/5 of the time, less than 20% of the time. However, if things are right, if our conditions are right, our win rate is going to be much higher than that, and also our risk-reward ratio is going to be skewed to much more towards the 1 to 10 ratio. Well, for every 1 unit of risk, every winning trade is going to be about 10 times larger than that. If we can get to that, we have a 9% break-even win rate is all we have to attain. So we're trying to set the odds in our favor. We're trying to make it absolutely foolproof to be profitable over time. Any one particular trade we don't care about. Nobody should whine about, in this system taking several losses in a row. That's just what happens. Breakouts fail, and you get stopped out. However, because you know your risk 100% going in, you have it calculated down to the penny. Makes it much easier to sleep at night. Makes it much easier to trade because you know what's the absolute worst that can happen. Generally, when we're talking about our R in our risk that we put up, I'm usually pretty conservative. I'm about 1/2 of 1% at risk for every trade that I put on. So 1/2 of 1%. So if I took 10 losing trades in a row, 1/2 of 1%, I'm still only down 5% on my portfolio overall. Okay, so step number 3, we talked about keep our risk-reward ratio absurdly high, letting the winners run, cutting the losers quickly. So that brings up the concept of expectancy. So what if we took 1,000 or 10,000 or 1,000,000 of those same trades? What would we make on average? So in this system, we have a win rate of around 30 to 40%. So let's be pessimistic and let's use 30%. So winners should be 5x to 10x the size of the losers. Let's use the worst case, and let's just say they're just 5x. So R is our risk on each trade, and you need to know that going in. You need to know any trade that you ever do, what's your risk going into the trade. So in this case, let's assume an R of $100. That means we put on the trade, the worst that can happen is we lose $100. How do we know that that's the absolute worst that can happen? Well, because we put on a stop when we get into the trade. We put on a stop that we never deviate from, we never move, we never, hem and haw and, sentimental stop or anything like that. It's a hard stop that's on, good till cancel. Well, okay, if we have that all set up, our expectancy would be 30% of the time, what would happen? Well, 30% of the time we'd have a winning trade that would make $500. 70% of the time, what would happen? 70% of the time we'd have a losing trade and we'd lose $100. that expectancy comes to $80. That quite simply means every single time we put $100 at risk, on average, we're expecting to get back 80 bucks. So if on average you risk the possibility of losing 100 bucks a trade, and over time each of those trades net you $80, how many times would you want to do it? Well, as long as the expected value is positive and you use proper risk management, right? You're not putting all your eggs in one basket and then going on a losing streak, and you're not putting too much capital risk on any one trade, the account is going to grow over time. That's just the mathematical fact. So when are these setups available to trade? Here is just a chart, the daily chart of the Qs on the left and an hourly chart of the Qs on the right. Basically, what we're looking for is if we put the 10, 20, and 50 SMA on the Qs, we're looking for any time that those are what we term in the right order, right? That the market is trending up at least a little bit, and the 10 is above the 20, which is above the 50. And then the 10 and 20 in particular are pointing up. As long as that condition is met, these trades are generated across all kinds of sectors, mostly in this general group of tech or things that would fall into the NASDAQ tech index, into the QQQ. They're not quite S&P 500 stocks. Most of them they're going to be momentum or growth stocks, and things like electric vehicles or pharmaceuticals or software or Bitcoin or things that all fall under that QQQ umbrella, or even the Russell 2000. Okay, so if you can look last year when we had that huge market sell-off, the system didn't generate any trades between, say, like February and March. Why? Well, because the Qs were falling. The 10 SMA, the 20 SMA on the Qs were all pointing down, which means for us, any positions that we were in, we eventually got profit stopped or stopped on the position, and we just sat in cash and waited for better market opportunities to present themselves. If you look on the chart, when the market bottoms out, it only took about 3 weeks before, well, 2 weeks probably, before the 10 SMA and the 20 SMA were both pointing up. More opportunities presented themselves, and fortunes were made from during that period of time, from about beginning of May till about September of this last year. September to October, November was a little slow again. You can see the market traded a little bit sideways. And then again, December and January were fantastic. The market's been a little volatile, or a little bit sideways. And so we've had some decent trades in February and March, but nothing to write home about. This is the type of system that you trade, trade over the long period of time, and you're going to make fantastic, crazy returns 2, 3, 4 months a year, and you're going to sit on your hands and wait the rest of the time. By waiting, well, you could trade other systems, you can do whatever else you want, you can go on vacation. Don't worry about it. The returns during the times when it's good more than justify the time spent when it gets a little slow. So we have some questions coming up on the chart. We asked about ADR, so we already gave you the ADR script. Talked about some charts and real trades. We showed a couple of those. We'll show some more real trades in a second. R. Zukowski, how do you determine the risk and reward? The risk is fixed. We know exactly the risk going into the trade. We calculate that by whenever we take a current position. We have indicators that a custom indicator that does exactly this. If we're thinking about making a trade, it calculates if you were to enter at this exact second, and if you wanted to risk the X $100 in our example, $100 of risk, here's exactly how many shares you should buy. Okay. Now, if the market runs away and the breakout continues and we get a poor entry, well, what's going to happen? Well, it's going to naturally size down our position so that we're still going to lose on a losing trade that exact same $100. If we get a gorgeous, beautiful entry, we basically scalp it to the tick to get a perfect entry. Well, then we're going to be in full size, right? And so this system rewards you for getting good entries and penalizes you if you're too late. And like we talked about, recommends you don't even enter the trade if you can't get in before the average true range is met. Okay. This is, so we talked about in terms of the risk, how do we know on the rewards? We're not going to know on the rewards until we close out our trades. So we know on exactly what our multiplier was on the rewards when we close out the trades. We calculate this at the end of every month. And our goal is to only take the best of the best setups that are going to give us that 5x, that 10x. And that's somewhat dependent on the market. If you're in a market that runners just run and go like crazy, breakouts continue for weeks on end, it's going to be more than that. But in general, if you take great setups, 8 or 9 out of 10 setups, you're going to be able to easily get that 5x on the winners over the losers. No, we don't trade short at all. I have some philosophical aversions to trading short, especially when we're talking about people who are newer to the market. It's perfectly fine to trade short if you've made, I don't know, if you made $500,000 in the market, go ahead and start trading short. Much harder to do it systematically because it's like rowing upstream. Everything is against you when you're trading short. Let's see. R. Zukowski asked, do you check first the overall market before running the scans? Yeah, well, we run the scans all the time, and you'll see over time that not as many setups are generated when the market's not in alignment. But yeah, every day we look at the cues and make sure that the cues are pointing in the right direction before we enter any trades. Ronnie asked, does the system work trading options, call, put, or spreads? Yeah, we have some advanced stuff for trading this with calls, and of course you could trade it with in kind of a covered call scenario and make income off of the weeklies or the monthlies if you wanted to off an existing position. So from John, he says, can you scan for these in Metastock? If so, what is the name of the actual program in Metastock? Yeah, we had a custom scan written for this in Metastock. If you want to email me, I can send it to you. This is from Snorkelpuss. I'll need to rewatch a couple times. Too many breaks in your speech. Will be available to rewatch again. I'm assuming we'll give it to you. Sorry, your audio must be cutting out. I'm assuming my audio is okay from our side. Yeah, and Jim just said a link to today's recording should be emailed out to everyone. This is from Waleed B. According to famous Thomas Bulowski, your setup is the most profitable in chart patterns. Are you having a subscription service? Yes, Waleed. This is Thomas Bulowski's chartpattern.com. This is the most profitable chart pattern that he recognized. Our research is separate from his, but I know that he's said that over the years. The height type flag. Phil asked, so where's the entry and exit point? So the entry is on a breakout after it's formed a high type flag, especially when the price is consolidated and it's surfing along a 10 SMA or a 20 SMA. The entry, we want to make sure that we get in on usually in the first hour that the market's open. We want our entry point minus the low of the day to be less than the average true range, right? Okay, so let's say that average true range is $1. The entry, the low of the day is 100. The market's at 101. We want to get in before the market goes from 100 to 101 because we want to make sure that we're in the trade before it's moved its normal daily move. This is from Gary. Says, can you send a share file of the top scans for the system? Yeah, they're on the screen, and yeah, everybody can send me an email if you're interested in those scans as well. Phil A, can you trade on a 10-minute or 30-minute chart? Yeah, 30-minute would probably be fine. I try to not trade anything less than 30-minute just because I don't want to day trade. I want to put on a position and watch it work. I want to be a gardener or a farmer. I want to plant the crops and watch them grow. Okay, so here's some recent trades. Zillow entry on 9/15, which you can see represented by the white line there. 17% gain. Apps 9/15 entry, and that was actually was a late entry as well. 26% gain. Fiverr 9/23 entry, 18% gain. Neo, so you can see these are all momentum growth stocks that you've probably heard of. Neo, Fiverr, stuff like that. 9/29 entry. That was actually, well, this one we had a couple trades on it, but that particular trade I'm pointing out was 19% gain. DNLI 22% gain. Kirt 56% gain. Rig 15% gain. Tupperware, this is the one we're talking about. This one was an 80% gain from the 827 entry. And we could go on and on. I have some others to show you as well. Did you enjoy our time together? Hopefully you've enjoyed our time together so far. Did you find this information valuable? Hopefully that's true for sure. Do you feel that you can at least try some of these tips over the next 7 days? Do you know more about trading than when you first got on the call today? And do you feel a bit overwhelmed perhaps and curious about how and where to start? Okay, so this is the point where I'm going to give you a quick sales pitch of what exactly I have to offer. Then we're going to open it up for Q&A. We've got about 20 minutes until the top of the hour. So ask any questions you have, and we'll go from there. So I'm going to skip through a little bit about this and talk to you about what we're doing, which is our stock trading science beta test. So what's in the beta test is everything's up and running. We've already got some members on board, and here's what you'll receive today if you want to go ahead and join and trade the same strategy with us. It's usually a $2,995 unlimited membership, which never expires. That's also known as a lifetime membership, but we call it unlimited because credit card companies don't like you calling stuff lifetime these days. So we call it unlimited, never expires. This is the beta test price only. Here's what you're going to get. It's a small price to pay. The profits from maybe 1 to 5 good trades. If you have a decent trading account, if you have a $20,000 trading account, you're basically going to give us the profit from 1 to 5 good trades to give yourself a lifetime of great trades. Because once you know how to trade the strategy, you can trade it with us on a daily basis in our Slack group, or you can trade it on your own as well. Here's what you'll receive if you want to go ahead and take advantage of that. You get the training. We have the full 3 recorded training sessions that cover the 3 core aspects of the strategy, everything on the scans that we mentioned, everything on the setup, entry, and exit rules, and everything you possibly could imagine on the position sizing. We also have every scan, indicator, and setting that you'll ever need completely up and running on Thinkorswim. The trainings and all the software is already posted in there. We started this program back in late November. That just for the training and just the software is a minimum of $3,000 value. So for the scans, here's the scans I'm talking about. In Thinkorswim, we give you the exact setup with the custom indicators, the exact scans, plus the charts. We also do the charts for you in, we also have, let's see, in TC2000, and we also have Metastock. In any other platform, we can work with you to show you how to configure it, or if it's possible, if there's more than a couple members that request something, we can go ahead and get that built for you. But my core trading platform that I use day in, day out is Thinkorswim 2S. So we have everything built out to the 9s in Thinkorswim. You get all that immediately, TC2000 or Metastock. We also have a Slack group. So that's a daily trading chat of our setups, active trades, and questions and answers from members and moderators using Slack. That's a $2,000 value. I'm on there most every single trading day that the market's open. You can ask questions on there. You can ask questions from other moderators. We share trades that we're in, setups that we're looking at, all that kind of good stuff. So that alone is worth $2,000. We also keep a trade journal, give you a copy of that. That's an updated Google Doc showing all the trades that the moderators take in real time with complete results. We also give you a monthly live customer support webinars. So those are, just like we're talking here tonight, get on live, answer any customer support questions. You get that for an unlimited amount of time, and that's a $1,200 value. You get unlimited access to personal support from myself and my moderators. Of course, that's a pretty, can't really calculate the value of that. The total value of the package is at least $6,700 for what we're giving you today. Of course, I want to give it to you for a discount, $2,995. This is all backed by solid evidence and real-world results. Show you a couple of those recent portfolios and TOS and various accounts. Some of these are names we've talked about before, but here's 19.4% on DNLI, Kirt, Penn, Rig, Snap, Tesla. That might be the big Tesla trade. I'm not sure if that's exactly the same trade. 70% gains on Kirk and MIK, 7% gains at AMC and ARRY, TAN, which is a solar ETF, and Tesla, Futu, Square, 22% gains, and then a whole slew of them again, 14% gains overall. And in other accounts, Penn, SE, Snap, Tesla, and it goes on and on and on. And one crazy screenshot, not my personal account, another colleague trading the same strategy. This is unrealized profits from his brokerage account on a good market run. $3.8 million is the number of green that he had unrealized at that point. So $3.8 million unrealized gains. How many times would you need to do that to have a decent trading career? Obviously not very many times. So here's a recent sample of closed out trades from one of our past months. or one of our past month stats was 487% net gain. That's if you take all the trades and add them up, the percentages, plus 10, minus 20, plus 10, all that, add them up. Mine had a 70% win rate, average win of 36.7%, average loss of 4.4, risk return ratio of 1 to 8.3. And of course, our ironclad 2-part performance guarantee. Part 1, go through the entire trading, start trading live or in demo mode. If you don't love it, you get a complete refund anytime within 90 days. Part 2, learn the system, use it for a full 6 months, execute the trades that come up. If you don't make at least 10x your system investment profit, I'll work for you with you for free, alongside of you for free until you do. So either way, you love it, make good money, or you hate it and you get your money back. So let's go ahead and skip forward to this. I want to go ahead and do something special for the Candlestick Forum group. We'll give this all to you instead of the normal price of $3,000. We'll just discount it to $995 for taking part in the beta test, putting your best foot forward. If you sign up by midnight 4 calendar days from today. And so if you do that, this is for unlimited access. You really only have to make one good trade with the system with a reasonable $20,000 account to pay for itself. Every trade, profitable trade after that is gravy. So $995 for that. To claim that spot in the beta test, just order online 24 hours a day, 7 days a week, 365 days a year. Go to stocktradingscience.com/order or stocktradingscience.com/call. Each of those are available. The first one, obviously, if you just want to head book, you go ahead, place your order. You'll go ahead and get your automatic login and password. Enable you to log in, and you could be with us tomorrow morning on our Slack group for that. Or if you have a couple questions, I'm more than happy to chat on the phone with you for 15 minutes, see exactly where you're at and see if this is something that will work for you. That would be stocktradingscience.com/call. So either yes, you're in, stocktradingscience.com/order, or a solid maybe. I'll take that as well, stocktradingscience.com/call. So the beta test offer expires 4 calendar days from today, no exceptions. Okay. And this is my trading setup. This is where I'm sitting right here right now. You don't have to have anything that sophisticated. You don't have to have the 3 monitors set up or anything like that. But we're going to give you everything that you need to trade exactly the way that I trade. So questions and answers, and go ahead and pop in some questions if you have them in the questions box. I got about 12 minutes before we're going to wrap up. How much capital do I need to get started? I would recommend no less than $5,000. I would recommend more realistically in the $5,000 range. We're not day trading or anything like that, but just allow you to spread your capital out. But at the absolute minimum, you're going to need at least $5,000 because I don't want you putting any more than 20% into any one particular stock. What kind of computer do you need? Well, you guys are here. We don't really need to answer that because if you're on this webinar, you have enough computer to do what we're talking about. Brokerage, account, and trading software. I'm pretty platform agnostic, as in doesn't really matter to me. All of the charting stuff that we do is principally on Thinkorswim. We do also have it on TC2000 and Metastock. Let's see. How does the guarantee work? We talked about that a little bit. The guarantee, the first part is, let me get to the guarantee. Part 1, go through the entire training, start trading live or in demo mode. And if you don't love it, get a complete refund anytime within 90 days of ordering. So simply submit your trading log and we'll issue a prompt refund. We just do that because we don't want looky-loos. We don't want people who join and cancel the next day. We want people who actually log in, go through the training, and do it. Now, by doing it, you don't even have to risk any money. I'm just saying, at least do some trades in good faith in demo mode, see the ups and downs, ins and outs of the system. And then part 2, if you join and for whatever reason you're not seeing the results that you want, stick with us. We'll make sure you get the results up until you at least made back 10 times your system investment until you've done that much. Okay, let's see. So again, claim the spot in the beta test, order online, stocktradingscience.com/order, or book a 15-minute call with me directly, stocktradingscience.com/call. I'm going to go ahead and check in the chat box, see how many questions we got in here, and then go through some of those. Okay, what's the beta test? The beta test just means it's not super polished. Its content's wonderful, everything's there, everything works, but this is something that we still haven't fully rolled out yet. That's why it's $995 instead of $3,000. I haven't started my advertising yet. When we start running YouTube ads and all that kind of stuff, I'm going to have to boost the price up just because what I'm giving people $1,000 is peanuts. So right now I'm only selling it to my own customer and prospect list, my past customers, and a few select locations like here with Candlestick Forum and Stephen. That's why it's a beta test. The beta test is $1,000 as we finish everything up, get everything polished, get all the scans working correctly, everything like that. Okay, talked about today's webinar will be taped. Yes, today's webinar is taped. Waleed asked, do you send daily emails on stock picks? No, we do not send daily emails. Everything that we do on a daily basis is in the Slack group. You download a piece of software for free called Slack. It gives you a full timestamp record of everything that we're talking about. Nothing is, after the fact. If I say that I'm buying a stock, I enter the exact price that I bought it at, exact price I got stopped out at, exact when everything happens. Let's see. We talked about the beta test. This is from Newton. He said, what if we cannot find tradable stocks during the trial period? That's very unlikely to happen, but if we're in an extremely bad market for the system in terms of no good setups are generated, we would just extend your trial period. It's not a problem. Generally, you're going to have, a couple good months followed by a decent month followed by a slow month, and then back to a couple good months, right? So in any year period of time, our goal is to average somewhere around 15% monthly. However, it's never exactly 15% in a month. You're going to have some months you can be up 50%, 70%. Other months you're flat, but the average generally comes in at about 15% a month. Phil says, you think we are loaded with cash? Yep, absolutely. Well, $1,000 is not much to get started and to start making these trades, because if you have 20,000 in an account, that's about the profit you're going to make on one decent trade. This is from BJ. Says, can you offer a trial for a few weeks like Mr. Bigelow did? I'm not sure what Stephen did on his trial. This does have the trial, as in it's you pay the money and it's 90-day satisfaction guarantee. We want you to do the work. We want you to go through the training. We want you to place some trades at least live or in demo mode. But if you're not convinced after that, if they're not the best trades you've ever seen, which is your own determination, right? We can't promise results or anything like that, of course, because we can't predict the future. But we can promise exactly what we're going to give you. We can promise exactly what you're going to get on a weekly and daily basis from us. You're going to get all the hand-holding, all the support. We're there on Slack every morning. We do all the customer support webinars. We answer every question in a timely fashion. And we have tons of people with some pretty amazing success. So kind of show you a couple of these. So people are asking what are the results. So this is a guy, Brad Murray. He's a friend of mine locally. Had never traded a stock in his life and is currently up 97% in 4 months, including he had one trade for 185%. So he is my absolute guinea pig when it was a beta alpha test, and he's up, well, I was going to say 100%, but he's not quite up 100%. He's a little bit off this month, but he's up 97% overall in 4 months. Brad Murray, and he's on the Slack group. You'll see him on there on most mornings. Another one locally, a friend of mine that actually had traded before but had never been profitable, like most traders. There's tons of people in the world that have placed stock trades that have never really figured out how to make it profitable over the long run. He's up 103% in 6 months. Some of his best trades, 26% on apps, 28% on BVPR, right? I've taught a bunch of other people, of course, obviously. Greg P. turned it $1,000 into $101,000 in 5 years on one trade. That's not this exact specific program, but you can see that I've been doing this a while. 282% on one trade. John Spear turned $2 million to $65,000 over 4 years. This is a friend of mine that I've taught some swing trading strategies like this, and he's been trading for a number of years with turned a small amount of capital, $2 grand into $465, which ain't bad in anybody's book. And to claim a spot in the beta test, go ahead and do that. StockTradingScience.com/order or StockTradingScience.com/call. Answer any other questions we have that have come up, and we can go from there. So somebody asks, what's the very latest trade you took so we can see something timely, please? Well, FCX would be one, if you want to take a look at FCX. FCX, we're currently up 5.89%. I think we bought that 2 or 3 days ago. So the $995 is lifetime. I think that about covers it. So Chris asked, how much trading during market hours is needed, or can we trade after hours? And you can trade after hours using alerts and buy stops and stuff like that. I generally prefer that people have at least 15 minutes sometime during the first hour that the market's open. If you have 30 minutes, that'd be great. If you have an hour, that'd be even better, but at least 30 minutes. Henry Kim asked about, does the system work in options? Yes, you can trade options using this. That's in some more of our advanced strategies, so we kind of hold that back to make sure that people got a good handle on that. Otherwise, options are just a good way for people to lose money faster. But yes, we do trade options on selected numbers of these that have a decent open interest and a decent bid-ask spread. So missed the beginning. What's your name? My name is Kirt Christensen from Stock Trading Science. All right, I think that's about it, and we're about 3 minutes from the top of the hour. So. Okay, well, we'll turn the time back over to you, Stephen. I think I'm about done. Let's see. Well, I'm to the end of my slides. So does that mean I'm done? So seriously, folks, this is a, pretty simple. It ain't rocket science type of system. We get people to learn this setup and strategy and get profitable with it. And we have a lot of fun with it. Obviously, I have 2 people that have already doubled their accounts with, or close to double their accounts, and we've got several more that are right there. This month has been a little bit slow, break even, or not much happening, but we've got some great things setting up for next month. This is the way that trading really works in swing trading, as in we're making the right trades at the right time and watching the crops grow. All right.
Kirt, thank you very much. Good stuff. Everybody, take a look at it. Anything that can improve the probabilities of being in the right trade at the right time, if it fits your trading style, this is Kirt's always had good stuff. That's why we keep having them back. So Kirt, thank you very much. That was good.
Hey, thanks, Stephen.
All right, everybody, have a good evening. We will see you bright and early in the chat rooms tomorrow.